Hello and welcome back. My name is Curtis Dorr. I'm a trainer with Family Investor, and today I'm going to cover a topic called inflation, and I subtitled it The Truth. Because when I first learned about inflation, I just thought basically, okay, cost of goods go up, and they go up a little bit all the time. Well, a little bit all the time adds up, and you can go to the websites and look at the Consumer Price Index, which shows you what inflation is, and their number I've discovered is not an accurate number. And I'm going to go over what I've learned from one of my wealth gurus. And on the first slide here, you can see that I started off with a quote from Ronald Reagan that inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman. The reason he says that is inflation is like the ninja. If you don't know about the ninja, inflation is going to sneak up on you and take away your money. And the reason it's taking away your money is it's doing it in a sneaky way that you're losing purchasing power. So we don't realize it because little by little, candy bars go from 5 cents to $1 something. I just dated myself. We used to pay a nickel for big candy bars. Candy bars get smaller to keep, but per ounce you're paying a hell of a lot more than what we used to pay 30 years ago. And the way it works is like right here you'll see groceries cost $100 today. Next month it'll be $102, and you don't even realize it. January 2017, inflation was at 2.5%, and I think if you go on the website you can see that I think in March it was 2.7. So we're above this 2% amount. And by it taking away your purchasing power, it's making your money worth a lot less. That's why I like to play on words there about worthless. Your money becomes worthless. And the simplified way to look at it, since we try to keep our training simple, is if you're not making 2% on your money, you're going backwards. Because it cancels out your earnings because you're not keeping up with inflation. It's as simple as that. Well, here's a little chart, third-party website I went to that just to show you their calculators. You can take $100 for 15 years, 2002 to 17, and you go up about $36, which is about 2% a year. So that's to show you in 15 years you're going to pay a third more. So if it's $1,000, you're going to pay $360 more for that same product. What you bought today for $1,000 will cost you in 15 years that much more because of inflation, and we don't realize that. And here's the part that I learned from my mentor. He says and he calls it a secret formula. B equals I divided by 1 minus R. What is this secret formula? It's a break-even formula, and this formula is taught to financial planners as part of their training. And the question is, why is this information not published? Why is this information not put in your face? Every time you sit down with a financial advisor or planner, why is it they do not cover this? And the only reason I could think of is because if you understood inflation, you would understand that the bank's paying you low interest, the earnings you're making on certain investments, you're not really making what you think you're making. Because if you subtract 2%, that's what your real return is. If you're making 4, you're actually making just 2%. And the I in here is inflation rate. And I was introduced to shadowstats.com by my mentor. And you'll be amazed at what they have found. And the effective tax rate is what will you be taxed later on, because taxes, you got to pay taxes on your money, so on your earnings, right? So, and if you're earning a lot, you're going to pay more taxes depending on what tax bracket you're in. And you go to this website, you can read on how they have altered the inflation rate calculations by law. They took out, listen to this, by law they took out food and gas out of the calculation. Raise your hand if you consume one of the two. I eat, I have a vehicle, I put gas in my car, and that's not part of the inflation rate. That's ridiculous. Why would they do that? That's everybody eats. Families are spending a huge part of their income on that, and that's not part of the calculations for the inflation rate. Well, look at this. This really gets you. This is what I learned. If you go to that website, you'll see that there's two graphs in there, and one is based on 1980 calculations, where those rules at that time, and the red line is the consumer price index at that time, showing, you know, it's way down there to less than 5% most of the way. And ShadowStats is the blue line, where they show their estimates of where inflation really is. And you'll see it's you know, if you added up all the numbers on here, you'd probably be somewhere around 10%. So if you're averaging 10%, we go back to our secret formula here, and you look at that, and 10% inflation, and I use the tax bracket 40%, because if that's the top of the current tax brackets, for those of you who would like to be exact, it's 39%, but this is for training purposes, so I round it up. And I'm showing worst case scenario. It's good to know worst case and best case scenario. That's how we determine a lot of investments. What's the worst thing that could happen? What's the best thing? Worst case scenario, in this situation, you're at 10% and 40% tax bracket. Your break-even return, in other words, what you have to make on your money, is 16.67%. If anybody out there, except for my fellow investors, can show me where people can go out and get 16% interest on their money, I want to know about it. And it doesn't exist. Even the stock market, unless you're in and out, and you dedicate every day. I think day traders do this, but even I don't know if they can maintain that type of percentage. You'd have to be an expert at that, just like we are in real estate. So if you're an expert in certain areas, you can get yourself up to those kind of rates, and you have to, because otherwise you're going backwards. Well, that's worst case scenario, but let me go into the next slide here and show you the 1990 graph. The 1990 graph, the laws were changed a little bit. So the red line, once again, is you know, the official published one, and the blue line is what ShadowStats has come up with to be a more accurate estimate of what inflation really was. And if you look at that, we're riding somewhere around 6%. So in this next example, I'm going to run it at 6%. Now we're a little bit more conservative. You know, you can already find out that you're at 2.5% right now for 2017. 6% will give you a better idea, and your break-even return rate at that is 10%. You know, you're making 1% or less in CDs. You're going backwards by 9%. That's sad. And everybody's going to say, well, how do I get ahead? Well, obviously, traditional forms of investing isn't going to do it for you. Like I said, you have to be an expert in stocks or real estate or in somewhere where you can get those types of returns. But to get higher returns, if you look at my risk versus return or risk versus reward training, you'll see that that could be a problem too, because the higher the return, the higher the risk, unless you have someone who has a track record. Track record's the key to that. A lot of the things that we do teach you, though, is methods, how to pay less taxes, pay less interest, pay less fees, etc. You want less money going out to other people that's unnecessary, you know, beyond the inflation number. You know, you're paying too much interest, taxes. There's methods and strategies to put that back into your pocket, which is the same as earning. A penny saved is a penny earned. And we also teach how to earn higher interest, how to determine someone's track record. And I also put on the blog, I believe, how to avoiding negative returns, how that affects you. That's another thing that takes money away from you, and people just don't care. It's almost like, it's all right, everyone has a 401k, and I'll show you how to invest in your 401k too, to maximize your returns. Okay, and then leveraging and etc. There's just so many different things that I can't go over, because this training is about inflation, and hopefully I've got the point across, so now you understand, you know, what the inflation is all about and the truth about it. And so I'm going to thank you for watching my video. I hope you enjoyed it. I want to make this fun, and I want this to be simple to understand. And now you know that inflation is the ninja out there that's taking money away from you, and you need to think about that when you're planning your retirement, when you're looking into the future. It's there. It's a reality. All right. Well, thank you, and have fun.